Hey everyone, I'm Dr. Seibel. In today's video, I'm going to talk to you about long-term care insurance, something you need to know about. And I'm going to do it by interviewing Meredith Pensack, an authority on the subject. Listen up, I know you're going to find this helpful. Okay, first of all, let's begin by letting me ask you, what's your name?
I'm Meredith Pensack.
And tell me what you do.
I'm a long-term care insurance specialist.
And what exactly is long-term care insurance?
Long-term care insurance is the coverage that pays for care no matter where that care is received. Although it does pay for care in assisted living or a nursing home, the lion's share of people tend to use it right in their own home.
And who exactly needs that kind of insurance?
People who need help taking care of themselves, whether it be because of a cognitive or a physical issue. We really don't know what will happen to us down the road, so it's really pretty much anyone.
So it's kind of what we think about of insurance when beyond health insurance. How does it differ from, let's say, health insurance?
Health insurance and Medicare supplement insurance doesn't pay for custodial care. It will pay for skilled care like hospital visits, doctor's visits, prescription drugs, that type of thing, but it won't pay for the care to sort of help you live your life on a day-to-day basis.
Okay, so this is something in addition then to health insurance is going to help the quality of your life beyond just trying to get well.
Absolutely, because if you don't have this kind of protection, you might have to rely upon family members or a healthy spouse to take care of you, and that can be rather burdensome.
And exactly, how do you go about looking for long-term care?
To look for the insurance, I would say find someone who is specialized in this area and do some comparisons, look at a couple different companies, and then that agent should be able to help you drill down the most important pieces of a plan.
And, you know, as you kind of plan for this, what are some of the important things that you really want to know?
Well, the key components of a plan are how much will they pay me per month or per day? How long will they pay me for? We multiply those two together and we get a pool of money. Now, of course, we don't know how long we're going to need care for, so the length of time is really a bit of a misnomer. It's really more the pool of money and how you use that. We throw in inflation protection to grow the pool of money so that the plan makes sense years and years down the road, not just today. And then we have a couple of extra riders that would enhance the plan.
I see. So when you look at these things, there's so much information. I mean, everybody has trouble with the fine print, so to speak. So is there anything in the fine print that people should be looking for?
Once an insurance carrier accepts you based upon your health today, the only way that they cannot honor a legitimate claim is if you drop the plan by not paying for it. So the kinds of things that are excluded from most plans are things like active war, intentional, you know, when you're harming yourself, drug or alcohol detoxification, those kinds of things. But short of that, a legitimate claim because someone needs help physically or cognitively, that will not be excluded.
Now, is this the kind of help that you get when someone like visits your house? So, like, say you need a nursing assistant or someone to come to your home to help you with things. Is that the kind of thing this is?
That's what it mostly is. An aid, for example, to help you do boring tasks like grocery shopping, cooking, cleaning, laundry, take you to the doctor, that type of thing.
So really, this is kind of important because let's just say you get older and you have some kind of a disability or some kind of a problem, some illness. Maybe you have surgery and you're home and you need help. Is that the kind of thing that helps?
Yes, but in order to satisfy the definition of a federally tax qualified long-term care insurance plan, there's a legal definition, and here is that legal definition as to when you trigger the benefits. And when you trigger, you stop paying the insurance and they pay you the benefit. So here's that definition. When your doctor is guessing for at least 90 days, that's the long part of long-term care insurance, that you'll need help with at least 2 out of 6 activities of daily living, no matter what your age, no matter what the reason. And here are the activities of daily living: bathing, feeding, dressing, toileting, continence, or transferring, the act of moving from a bed to a chair or across the room, or you have a significant cognitive impairment, some kind of memory loss.
Well, that's pretty basic necessities for life when you're having a problem.
And people don't usually think about that because most of us are in good health and we live our lives. Sometimes it's when a parent or a family member needs care, when the adult child says, ooh, maybe this is something we should consider for ourselves, so we're not going to put our kids through this.
I see. So who exactly, how do you make a good decision with this? How do you say, okay, it's right for me, I'm going to make my decision? How do you go about that?
I would suggest that you reach out and find an agent that specializes in long-term care insurance. Sit down and have an honest conversation about what your goals and needs might be, and have that person do some research on your behalf and make some recommendations, and work with that person to see if they can tailor make a plan that would be appropriate for you.
And you know, a lot of the people that I see are women. They're women in the 40 to 65 age bracket, which is a lot of people. And obviously you don't want to wait until you absolutely need it to get it.
That's the rub, isn't it?
Yeah. So when does a person say, hey, I better check this out?
Tongue-in-cheek, the answer would be before you get a diagnosis. But I would say the real answer would be when you are in good health. And it will never be cheaper than the first time that you look into it. The younger and healthier you are, the less expensive the premium will be. It always works out mathematically better if you pay a low premium more years than a much higher premium for fewer years.
So just, that's an interesting point. So what you're saying is like, say you're 50 or 55 and you're in good health, you're not really thinking about having a problem right now. You remember that your mom has had a problem, maybe, so it's on your mind, and you think to yourself, but gee, I'm so young and healthy right now. You're saying it's better today to pay for a longer period at a lower premium than to wait till you're 75 and check it out.
Absolutely. The younger you are, the cheaper the premium. The insurance carriers also increase premiums for brand new applicants every now and then, and you would be grandfathered into your plan even though new people would have to pay more. So that's, you know, that combined with your birthday is a reason why it would be best to look into this, you know, as soon as you first think of it.
Now there's a couple of terms that I looked into when I was looking this up, and there were terms like shared benefit rider. What is that?
It's a very popular option that couples like. It's a feature that links plans together between a husband and a wife. So if one doesn't need it, then that spouse's benefit is there for the other spouse. If one has a longer illness, then once they deplete their own benefits, they can then use their spouse's. It literally doubles your coverage, but it does not at all double the price of the plan.
Well, that sounds like something that people should look into. Now, what about the waiting period? Is there a window before it becomes active?
Traditionally, with this kind of insurance, the most common deductible is not the first 90 days. However, when I work with people, I always include a feature called a 0-day elimination period for home care. In short, it just means no deductible if you use the plan at home.
And there's another term that I came across called an inflation rider. And what is an inflation rider?
It's a feature of the plan that I think is actually the most important. It grows your benefit, so that your benefit makes sense not only today, but many, many years down the road. Because it really wouldn't do you any good to have a plan that had a flat benefit, because prices are going to continue to increase.
And I know when we had spoken earlier, you said there's probably a top 5 things that people want to know. Is there anything you'd like to cover in terms of that we haven't covered that might be important for people to know?
I would say it's really important to find a premium level that you're comfortable with, because no matter how great the benefit is, if the premium isn't comfortable in the long run, it won't do you any good. There's lots and lots of choices in terms of how much coverage, so really take a look at several different options in terms of how much benefit and how much cost. That would be one thing. Another thing would be, I just want to drive home the point that as soon as you first think that it might make sense, do the research. Even if you decide not to proceed, at least you'll really have an understanding about what it is and what it could cost. Another thing that I would say is don't wait until you already have a diagnosis. My phone rings off the hook with people who call up and say, you know, my wife just got Alzheimer's, can I get her long-term care insurance? I'm not making that up, that really does happen. So before you get any kind of a health change, you know, take a look at it. And I would say for couples, ask your agent to show you what a shared rider would do for you in terms of linking your benefits together and really maximizing your coverage.
Well, that's a lot of good information. Are there any other last points you want to make before we conclude?
I would say if what's important to you is not burdening your children and making sure that your retirement portfolio lasts you throughout your retirement, consider the coverage. Again, I'm not telling people you have to get this insurance, but you almost have to ask yourself, what are the consequences to my family and to my portfolio if I don't get long-term care insurance? If I had a stroke someday and now I have to start draining my assets to pay for my care, you know, I really could have avoided that situation by doing the you know, research when it was possible. So don't procrastinate is, I guess, my parting tip.
Okay. Thank you very much.
You're welcome.